Hey everyone, welcome to the KE Report, a company update coming from Vizsla Silver, now traded on the TSX under the symbol VZLA, as well as on the NYSE under that same symbol VZLA. I'm chatting with the President and CEO, Mike Konnert. We're going to be discussing this transition to the big board in Canada, as well as outlining some of the catalysts on the forefront here: exploration, resource, economic studies, and potentially even that test mining. So, Mike, thanks for joining me today. Let's start off with a quick comment on graduating to the TSX from the TSX.V. Look, one thing that Vizsla did very well early on was join the NYSE, and after the success you were having through exploration that translated to share price, we saw the company get included in a number of ETFs. It has helped support a higher trading volume as well as a higher trading price. What's the strategy with the TSX? What might that open up for the company?
Well, the TSX graduation is just a continuation of, the process here of becoming that go-to silver producer, silver investment. So, the TSX, of course, is just a more prestigious exchange. There's fewer mining companies and fewer silver mining companies on it, and it attracts somewhat different pools of capital. And, as you mentioned, very important for us to be on the NYSE. That was a great thing that we did several years ago. This is similar. It opens us up to different pools of capital globally, but also in Canada that have mandates to invest on TSX listed companies and or are not able to invest in junior listed companies like companies listed on the TSX.V or the CSE. So it just increases the amount of potential investors, which is great. It also just shows that we're meeting a higher level of criteria to stay listed on that exchange.
So when you've been marketing the company, have you been hearing that investors saying, look, you're on the venture, we just can't invest in you? Was that a continuing theme?
Well, not exactly, not with the NYSE listing, but I think it's more the ETFs and things like that where you don't actually have these meetings in person. We saw with the SILJ deletion recently on Vizsla that they make different decisions than active investors do. But with ETFs, they have a set criteria or mandate, and oftentimes it doesn't include venture or CSE listed companies, and may have a specific focus on Canadian equities. In which case, the TSX would be that criteria.
Okay. Well, let's talk about what's coming for the company. Let's start off on the exploration front. What updates can you give us in terms of drills on site at the Pinucu project, but also what they're drilling?
So we have 2 rigs turning on the property right now. Both of those are focused on exploration, solely exploration. This is, outside of the recently completed infill campaign that we did on the PEA area, primarily on the Copala vein. We've moved out from drilling in the west to now drilling in the central portion of the project on both the Animus vein and the San Dimas Camellia structure. And, we're doing basically grassroots, early stage exploration drilling. So this is drilling targets that have never been drilled before and hoping to find new centers of mass. I mean, our big goal is that, we can start to show that this district is more than just the PEA area, that there's other centers of mass. And I think, that's going to happen shortly here. I expect there's going to be success with these exploration programs. But, it's not like it's a one drill hole success. We need to drill several holes in, sometimes upwards of 5 to 10 holes, to really understand what's out there. And that was the same with some exploration like La Luisa we did in the west. It wasn't until the 5th or the 6th drill hole till we really started to understand the orientation, different boiling zones, and where exactly the prime target was on the vein. So I think there's probably going to be indications that there's early stage success at some of these holes. If we're hitting mineralized structures, we need to understand what those grades are. That information feeds into further exploration holes and drilling holes. And so, I wouldn't say that investors should expect these results in a matter of weeks, but it's all going to be part of an update that we'll put out at some point here in the future, having to do with exploration. And of course, there's hundreds of targets across this district. So we do have a lot more to see, a lot more to test here, and this is really just the start or restart of our exploration program.
So as you've mentioned a number of times to me that, look, there are a lot of different targets you have out here. You are looking for really needle moving type of areas, these new center of mass. How much money are you allocating to this exploration, and how quickly will you turn on an area and say, you know what, we have so many other targets. If this one isn't delivering, say after X amount of drill holes, we're moving to another area?
The best part about what we're doing here is that the drill costs per meter are quite low. So we have budgeted 10,000 meters of diamond drilling. That would be done for less than, a direct cost, less than $3 million, certainly US. That's with everything, all the, peripheral exploration costs outside of just the diamond rig itself. But, it's a case by case situation. So it would take a lot for us to walk away early on from a project, but after 5 to 10 drill holes, I think you have a pretty good understanding. So that takes time, right? It takes months. And, I think we'll start to see indications of that from the Animus and San Dimas targets relatively soon, but I wouldn't say that anything gets written off too early here because, it all feeds into our model, and that model allows us to gain information and ideally be more predictive. And so one target that's not producing great results right away could be reinvigorated in the future with new information. So I wouldn't say anything is, if it's a real vein, a real target, I don't think anything is really killed within the first 5 to 10 drill holes.
Okay. Well, when we get more information on any results or a more broad exploration outlook, I'll touch base with you. Let's talk about the updated resource. When that is coming, look, the company already stands at right around 325 million ounces silver equivalent resource, fairly evenly split between indicated and inferred. What should investors be expecting for the updated resource?
The most important thing for us with this resource is to have reserve status of ounces, basically an M&I category that's going to allow us to have higher confidence in those early years of production in that mine planning. So what I would say, what investors and shareholders can look for in terms of the outcome of this MRE update is a transition of more indicated and some measured ounces coming out of the existing resource area. And so one of the things that we've been really excited about and that's worked out very well for us is the infill drilling campaign at Copala has actually expanded mineralization outside of that last resource area, closer to surface with higher grade ounces, and actually grown the resource through infill drilling, which is something that very rarely happens. So I would say that it's likely that we'll see an improvement in the numbers that are coming out of Copala, whether it's higher confidence or higher grade or more ounces. So I think it's something that's going to be good for us. We haven't done big step out exploration holes, so it's not like we're going to go from 325 million ounces to 500 or something like that. That wasn't that type of drilling. This type of drilling was really just for us to focus on what the first 10 years of a mine life is going to look like, and upgrading those resources, higher confidence, de-risking the project, and moving that into feasibility, and then of course into production.
And that's the thing, right? It moves all into that feasibility study. When should we expect that? How is that progressing?
Well, we've kicked off early work on the feasibility study. We have an excellent mining group that's working with us right now, and with the updated resource, with the test mine that's going to start before the end of the year, with feasibility coming, call it mid-2025 or the second half of 2025, there's a lot of really important aspects to what's happening here. So, the work has begun on the feasibility study, but it's going to be informed by this updated resource, and then later by the test mine as well, in terms of reconciling the resource with also understanding ground support and things like that, that you can only get by going underground. But I would say that the market can expect the feasibility study by the second half of next year. And of course, the goal is to basically use that feasibility study. Certainly it'll aid in project finance and allow us to kind of kick off and move very rapidly into production once we have that project finance and permits in hand.
So on that test mining phase, look, a lot of people get excited about test mining because they think that means the company's going to be making money. Sometimes they unreasonably think that the company's just going to be printing cash. Take us through what really the plans are, the goals are for test mining, and also outline approximately how much capital you think it'll cost to get into test mining, and if it is reasonable to think that you could be generating cash flow.
Well, this, I'll say right now explicitly that this is not to generate cash flow. So the company has about $100 million US in the bank right now. We don't need to test mine to generate revenue. The test mining is solely to de-risk the startup of the mine, to decouple the risk of starting a mine and starting a mill. This allows us to essentially get a head start on the underground development, get much closer and actually into the high grade material, the ore there that's going to run through the mill once the mill is built. The goal is to stockpile material, high grade material, medium grade material, and low grade material above surface, and have about a year's worth of mill feed stockpiled ideally by the time that we're starting production. So this is really a de-risking step for us. It's not a revenue generating step. It's a step that's going to allow us to be underground, to put our eyes and our hands on the vein, understand how it behaves better than we can through small drill holes, despite the fact that we have a high number of those drill holes, and we've drilled a lot in Copala. It's really nothing compared to actually being underground and seeing the vein. So this is purely non-revenue generating, but what it does for us is de-risk the project massively. And this is really where you see a lot of companies struggle and fail. You can think of companies like Pure Gold and Ascot recently, that aren't able to fill the mill or feed the mill the way that they should, but also, miss things and mistakes that you otherwise would see if you had the time and the ability to go underground. So the budget for this is basically $10 million US, obviously very well covered by our current cash on hand. That'll take us into, ideally, well into 2025 with this test mining. And of course, that's all covered with funds on hand, as I just said. But, it's a very important step for us to undertake.
All right. Great. Mike, thank you very much for just a quick overview for the company here. Looking ahead, there's a lot of catalysts on the forefront for Vizsla Silver. Now it's just going to take a little time, but at least you have the cash to do all that. And also, everyone, update, again, that stock ticker to the TSX under that symbol VZLA. Again, Mike Konnert, President and CEO of Vizsla Silver. Mike, thanks for the update.
Thank you very much, Corey. Appreciate it.